Alrighty. Hey everyone, Nicole and Alyssa here with another Blondes Breaking Down Real Estate episode. Today we have a special guest with us, Jacob Lowry. Jacob is a loan officer with Team Evans at Cross Country Mortgage. Him and his team have helped many of Alyssa and my clients over the last few years successfully finance their home purchases, and we are both super grateful for everything he does. We wanted to get Jacob on the show today to dive into how coronavirus is affecting the housing market, specifically from the financing side of things. So without further ado, Jacob, welcome.
Thank you. Thanks for having me.
All right, Jacob. So before we get into any specific questions, can you please just tell us about yourself? Give us your background. How long have you been in the industry? Tell us about how many transactions you've done, and tell us about Cross Country in general.
Yeah, so I'm Jacob Lowry. I'm at Cross Country Mortgage. I've been in the mortgage industry for probably now, I guess, maybe 8 years or so. And just been, on Team Evans ever since I got into it. And in terms of, transactions that we've closed, it's hard to even count how many we've done all together. I mean, I know
I want to say our team's done like 1,000 together, like just our team with you guys. And I know you do other business as well.
Yeah, absolutely. No, yeah, I know we've definitely done easily probably over 1,000 deals with you guys. And then 2019, we closed just shy of about 700 loans for about 286 million. And then in 2018, we were at about a little bit less than 400 loans. But so definitely doing quite a bit. We do a lot of VA, of course. We're number one in the country in VA for the last 2 years in a row. And but we certainly do all other types of loans as well: conventional FHA, jumbo, down payment assistance, stated income, all that type of non-traditional stuff as well. Except right now, which is one of the things that has been impacted, some of the loan programs.
Awesome. So we'll get into that. Yeah. Let's start with the pre-approval process. What major changes have you seen in regards to pre-approvals, changes in income, credit scores needed, employment, all of that? If you could go through FHA, VA, and conventional, that would be super helpful.
Yeah, so generally speaking, the guidelines for income and credit and assets haven't changed substantially, but that is not necessarily true for every company. So what's been happening right now in the industry is just sort of a shift away from risk, or trying to mitigate risk as much as possible. So a lot of companies have tightened up some of their guidelines a little bit in terms of minimum credit scores. So on FHA and VA loans, for example, a lot of lenders did make a change to basically disallow anything below a 640. So that was one big change that impacted a lot of mortgage companies. Our company, we didn't make any changes to our minimum credit score, luckily, so we're still able to do credit scores down into the low 6s and 500s, depending on the circumstances, of course. But otherwise, the guidelines themselves, they haven't really changed the core elements of the guidelines for underwriting. Overall, they've provided clarification on things, how to treat people that have been furloughed, for example. So they've given some guidance that's more specific to how to handle the situation with people that have been laid off or furloughed from their jobs and things like that. But overall, I'd say not a lot of major guideline changes, which is good.
Awesome.
But more specifically, one of the biggest things that has impacted it is people that have been laid off or furloughed from their jobs. So
let's kind of go into that. So from an underwriting perspective, what do they do if somebody's been laid off and they were pre-approved before?
Yeah.
Or they're in escrow.
Yeah, or they're in escrow. We've seen that too.
Well, yeah, we've had some situations come up like that where people, in escrow or people who were pre-approved already end up getting laid off or furloughed from their jobs, which unfortunately, we end up they have to put things on hold until they are back at work, or until they have a definitive letter from their employer guaranteeing a specific date at which time they'll be returning to work, which right now a lot of employers haven't been offering those types of letters because they just don't know, most of the time when people will be going back to work. So we do have to do a verification of employment within 3 days of closing. So we'll have to call the employer, before closing escrow within 3 days and make sure that the person is still employed. But that's not really anything new. We were always doing that anyways. It's just,
they haven't done it more than once or anything like that?
What's that?
They're not doing a verification of employment more than once?
No, not necessarily. I mean, we we do a written verification
Okay.
during escrow for a lot of clients to verify some details of their income, but that's not for everybody. But it's mainly just at the end. So within 3 days. It used to be within 10 days. Now they've tightened it to being within 3 days of closing. So they've just paying a little bit more attention to that.
Okay.
But yeah, unfortunately, if someone gets furloughed or laid off, then we can't use their income as part of the qualification anymore.
Gotcha. Okay. So
Unless they have a letter from their employer saying when they'll come back.
Yeah.
So that's kind of
and it has to be a date to get more specifically, the letter has to state the date that they're returning, and that date has to be prior to the due date of the first mortgage payment. Okay. So, for example, if you're closing today, escrow, your first mortgage payment's going to be due in July. So if that person was laid off right now, they would need that letter to confirm, specifically they're going back prior to July 1st.
Got it.
Okay.
Thank you.
So let's go off those questions a little bit. We have a couple of questions that we've been receiving that are similar to kind of the conversation we're having right now. Specifically, if you lost your job for a month or two and it's due to coronavirus, obviously, but you have it back now and you want to buy a home, will that, blip in employment affect your ability to qualify?
Not necessarily. I mean, it's not an automatic deal breaker if someone is off work for a couple of months. There's always, of course, nuances to everyone's situation, and every scenario is a little bit unique, and it depends on the loan program, of course. But generally speaking, if someone has a month or two off from work and then they're back at work full time, and the income is a salary or basically similar income to before, I mean, there's a very good chance that they'll be able to still qualify. Okay, again, everyone's situation is a little bit unique, but being off work for a month or two is not in itself necessarily a deal breaker.
Okay, good.
Well, so we had a few clients that were using down payment assistance programs, and we know that those have gone away. Can you explain more about that?
Yeah. So the programs themselves, I mean, there's a lot of different ones out there, of course. I mean, my company, we participate mainly in two of them, in CalHAFA and GSFA. Those are the ones that we most commonly use, and at least in California. And so what happened with those programs, I mean, basically those loans have become more challenging to sell. It's a higher risk loan, so that's kind of is consistent with the shift away from risk right now. So a higher risk loan from an investor's standpoint has become more difficult for the company to sell. And so basically what a lot of mortgage companies have done is they've either suspended the programs, and stopped originating those loans altogether, which is what we've done at the moment. Or what some companies did was they continued to offer them, but they have added a lot of extra guidelines to make it much more difficult to qualify for them. So that way the borrowers they're basically trying to find borrowers that are more qualified for those loans. So that way it's they're offsetting the risk with a more qualified person. So the programs themselves are still operational. It's just that not every company is still offering them. And so a lot of companies like mine included have stopped offering the programs for the time being. I mean, they'll definitely be back at some point. We just don't have an exact date.
Okay.
Cool. What about interest rates right now? So interest rates have been going up and down. Do you want to touch on that in terms of when should people pull the trigger? Are rates really good? Are they really bad? What's kind of the scoop? Because it seems like it's changing every day.
And rates, I mean, overall right now and lately have still been lower than I've really ever seen them. I mean, there's been dips in the market over the years, but right now we're locking in people on rates that are below 3%. In some cases, which so to getting in at a 2.75 or 2.875, that's an incredibly rare situation. So it's hard to say, of course, if it'll get any lower. Some people are thinking, oh, it's going to go down to 1% or something like that. I don't think that's going to happen.
Yeah. I'm going to buy if it does.
Yeah.
Yeah. There's a lot of factors, economic factors, and I mean, there's a million things that impact the market and, the stock market and the bond market and interest rates. But ultimately, the government, the Fed, does have some hand in controlling the market because they they invest money in the bond market, and by investing money, they impact interest rates. So I don't think rates are going to go down, to below 2% or anything. I just don't think that's realistic. So I think now's as good a time as any to take advantage of it. I think, and a lot of people have. We're still extremely busy. We had our biggest month ever last month in terms of closing loans, a lot of refinances and purchases. So refinancing is definitely big on a lot of people's radar right now, and same with purchasing too.
Wonderful. So you would say, in your opinion, it's still a great time to refinance and to purchase?
Absolutely, yeah. Yeah, the rates haven't gone up. The market is somewhat stabilized over the last couple of weeks. So when the coronavirus first broke out, we had days where interest rates were swinging, from the morning to the afternoon, 0.5%, which is something insane. That's just so unusual for it to be that volatile. But over the last couple of weeks, it's started to stabilize a bit more, and the rates have kind of maintained this low level in a pretty tight range.
Gotcha.
What do you think will cause Sorry.
No, go ahead.
I have a follow-up question to that. What do you think will be the signs that rates are going to start rising so that people know, okay, like this is the end of my window, I really need to pull the trigger?
I think it's going to be somewhat gradual. I think we'll see it, sort of gradually start to go up. I don't think it's going to all of a sudden one day shoot up. Right. I think as the economy bounces back and as people bounce back and more money is flowing into the markets, more money is flowing into the stock markets, people become a bit more liberal with investing and spending. I think money will shift away from the bond market and more into the stock market, which historically would tend to cause rates to increase a bit.
Gotcha.
And then the Fed, at that point, once they no longer have as large of a need to stimulate the economy, they won't have to be purchasing as many bonds, which means they won't have to be driving rates down.
Got it. Perfect. Great question, Alyssa.
Sorry.
No, that was good. In regards to unemployment, so say I'm receiving unemployment and I find my dream home. I don't have a job. Does that kind of income qualify as suitable income for a home loan?
Unemployment income can't be used for qualifying. And generally speaking, there are some rare scenarios where you can include it if it's part of somebody's job. So for example, some people work seasonal jobs and they work 6 months and then they're off for a few months. And then they receive unemployment every year during that that few months that they're off. People that have a history of that type of thing, you can use that, but that's very uncommon. It's not going to apply to most people. So your average person, let's say, got laid off from their job, they're getting unemployment. That income doesn't count as qualifying income.
Okay. Another question, kind of similar. If you lost your job and you're not working, you don't know when you're going back to work, but you have a ton of money in your bank, can you use what's in your bank to qualify for a loan, or do you have to have some type of verification of employment to be able to go?
So your standard loan programs, like conventional FHA, VA, that majority of people are using, are more heavily weighted on income for qualification. Now, so in terms of recurring income, there's a lot of different sources of income, but having assets in your savings account, having a lot of money in your savings account, that in itself would not be a basis of qualification. Okay. However, there are a couple of nuances to the guidelines where if you have a certain amount of retirement assets, if you are of a certain age and you have a high amount of retirement assets, that in some scenarios can be used to help you qualify. Okay. But for generally speaking, though, someone who has a lot of money in their bank account or maybe a lot of money in the stock market, that is not necessarily going to be something they can qualify based on. Now, there are non-traditional loans, though, that cater to that. So your non-traditional
we'll do a whole nother podcast on that.
Yeah. With the non-traditional loans, I've also kind of taken a hit right now. So those are higher risk programs. So a lot of the non-traditional investors have also put things on hold. So your bank statement loans, stated income, asset-based qualification loans, a lot of those have gone on hold. However, within the last couple of days, I have started to see a couple of investors come back into the market, so I see that space starting to open back up again.
Cool. Do you have any other questions, Nicole?
I do. What about you? You and your team have closed loans for both Alyssa and I in 17 days, 18 days. that has helped us to be very competitive in a hot market. Can you still close loans as quickly as that, or is everything going on with coronavirus pushing the escrow timeline back a little bit?
Overall, it hasn't really had much of an impact on our timelines. There are other things that can delay an escrow, of course, but in terms of, just the lending portion and our ability to get appraisals back on time, that generally speaking hasn't been impacted really hardly at all. So we're still closing loans in 17, 18, 19 days for purchases.
Great.
Yeah, we have one closing next week that we went from 30 days and now we're closing in 20. So that's
Oh, yeah.
Cool. Anything else that you want to
Do you
ask?
have anything, any advice for borrowers at this time other than refinance and get out there and buy, take advantage of the low interest rates that we have right now? Anything else?
Yeah, no, I think it's still a great time to buy. I mean, for people that, feel comfortable in investing in everything, I still think it's definitely a great time to get out there. The interest rates are incredibly low. I mean, I'm still seeing a lot of buyers out there buying a lot of homes for sale. So I don't think it's a bad time. Or even if you're just thinking about it and maybe you're a little unsure about what's going to happen, but you might want to buy, soon, I think it's still a good idea to get pre-approved, even if you're not ready to purchase just yet, or if you want to wait till the summer. I still think it's a great time to get into things. I haven't really seen things slow down much, so I feel like things are and the conditions are right to still be able to purchase a home and refinance.
Awesome.
Awesome. Well, how can people get a hold of you if they want to get pre-approved or refinance?
So you can call, email, text, any method is fine. I can give you guys I can send out
We've got your info.
We've got,
We'll
yeah, we'll put it at the bottom. So if anybody is interested in getting more information about your direct situation, then they can reach out to you. So
yeah,
we
I
really,
mean, even just
really appreciate it.
general questions or scenarios, or if you have a situation you think is unique. I mean, we've seen it all. I mean, every random scenario and possible complication. I mean, we've come across it, so we can definitely, try to make it happen.
Perfect.
Awesome.
Thank you so much, Jacob. We really appreciate it.
Yeah, thank you so much. Yeah, if anybody wants to reach out to Jacob and ask more questions, feel free to do so. We'll link his social media in here as well. Don't forget to like this video so that we can bring you more content, follow our page, and share it with friends. We really appreciate it. You guys have a great day.
See ya.
Thanks.
Bye.